Do you want your money to work harder? The stock market can help. It's like a garden for your savings. You plant seeds or buy stocks. With time and care, your garden grows, meaning your money increases. But be careful. The stock market has risks. It's like weather. Sunny days are great, prices go up. Rainy days happen too, prices go down. Don't worry. This guide will teach you how to be a smart investor. We'll learn the basics, step by step. Are you ready to grow your money? Let's begin. Think of a giant shop. Imagine a place where people come together to buy and sell pieces of companies. This place is buzzing with activity, with traders in colorful jackets moving around, shouting orders and making deals. It's like a marketplace, but instead of fruits and vegetables, people are trading stocks. People buy and sell pieces of companies. These pieces are called stocks. When you own a stock, you own a small part of that company. It's like having a tiny slice of a big pie. The more stocks you own, the bigger your slice of the pie. These pieces are called stocks. Stocks represent ownership in a company and a claim on part of the company's assets and earnings. The stock market is where these stocks are bought and sold. It's a place where investors can buy a piece of a company and potentially profit from its success. The shop is the stock market. It's a dynamic and ever-changing place where prices can go up and down in the blink of an eye. Traders are constantly reacting to news, economic data, and other factors that can influence stock prices. In India, we have two big shops, NSE, the National Stock Exchange, which is like the biggest mall in town. The NSE is known for its modern infrastructure and technology, making it a popular choice for traders and investors. And BSE, the Bombay Stock Exchange, an older, well-known shop. The BSE has a rich history and is one of the oldest stock exchanges in Asia. Prices change every second. The constant fluctuation in prices is what makes the stock market so exciting and at times unpredictable. Why? People think a company will do well. They buy more stock. Price goes up. When investors are optimistic about a company's future, they are willing to pay more for its stock, driving the price higher. People worry about a company. They sell. Price goes down. If investors lose confidence in a company's prospects, they may sell their stocks, causing the price to drop. This constant buying and selling is what keeps the stock market alive and vibrant. It sounds complicated, but don't worry, we'll make it simple. Understanding the basics of the stock market is the first step towards becoming a savvy investor. With a little knowledge and guidance, anyone can learn to navigate this fascinating world. So, stay tuned as we break down the concepts and help you get started on your stock market journey. You can't walk into the stock market. You need a helper. This helper is a brokerage account. It's like your online shopping cart for stocks. Many brokerage accounts exist. Here are a few. Zerodha, popular and easy to use, like the Amazon of trading. Upstocks, another good choice, known for its technology. ICICI Direct, from a big bank, good if you like familiar names. Choosing a broker is important. Look for low fees, easy tools, and good customer service. Imagine buying a car without looking. You wouldn't do that. Same with stocks. Research is key. Just like you wouldn't buy a car without checking its history, performance, and condition, you shouldn't invest in stocks without doing your homework. Researching stocks is essential to making informed investment decisions and minimizing risks. There are two primary ways to research stocks: fundamental analysis and technical analysis. Think of fundamental analysis like checking a car's engine and overall health. It's about understanding the core aspects of a company. With fundamental analysis, you look at a company's financials. Sales, how much money does the company make? This involves diving into the company's revenue streams, understanding how they generate income, and assessing their market position. Profits. Is the company making money after expenses? You need to evaluate the company's profitability by examining their net income, profit margins, and overall financial health. Are they consistently profitable, or do they have fluctuating earnings? Debt. Does the company owe a lot of money? It's crucial to understand the company's debt levels and how they manage their liabilities. High debt can be a red flag, indicating potential financial instability. On the other hand, technical analysis is like checking the car's mileage and history. It's about analyzing the stock's past performance to predict future movements. You look at price charts. Has the stock price been going up or down? By studying historical price data, you can identify trends, patterns, and potential entry or exit points for your investments. Trading volume. How many people are buying and selling the stock? High trading volume can indicate strong interest and liquidity, while low volume might suggest the opposite. Understanding these metrics helps you gauge market sentiment and make more informed decisions. Combining both fundamental and technical analysis gives you a well-rounded view of a stock's potential. It's like knowing both the car's engine condition and its mileage history. This comprehensive approach helps you make smarter investment choices and increases your chances of success in the stock market. Section 5. Infosys or Reliance? This is a question many investors ponder. Let's dive into understanding these two powerhouse companies. Both have made significant impacts in their respective fields. We'll start by looking at Infosys, a technology giant that has revolutionized the IT services industry. Infosys helps businesses with software solutions, providing everything from consulting to outsourcing. Think computers, code, and cutting-edge technology. On the other hand, we have Reliance Industries, a massive conglomerate with a diverse portfolio. Reliance operates in sectors ranging from oil and gas to retail and telecom. They are a true industrial behemoth, touching various aspects of daily life. Now, before deciding to invest in either of these companies, you'd want to perform fundamental analysis. This involves checking their financial health. Are their sales growing consistently? Are they profitable year after year? In addition to fundamental analysis, technical analysis is also crucial. This means looking at their stock price charts. Are the prices trending upwards? Are there patterns that suggest future growth? But remember, while these analyses can provide insights, past performance doesn't guarantee future results. Always consider the risks and do thorough research before making any investment decisions. Section 6. Let's make a trade. Ready to buy? It's easy with your brokerage account. 1. Log in. Open your brokerage app or website. 2. Find your stock. Type the company name or stock symbol, for example, INFY for Infosys. 3. Choose your order type. Market order. Buy now at the current price. Limit order. Set your price. Only buy if the stock reaches that price. 4. Enter quantity. How many shares do you want? 5. Review and confirm. Double check everything before hitting buy. Congratulations, you're now a stockholder. Kibisai. Section 7. Keep watching. Your money is working. Buying is just the beginning. Now you're a stock owner. Pay attention to company news. Good news? Stock price might go up. Bad news? It might go down. Market reports. Experts share their thoughts. Listen and learn. Your portfolio. Check how your stocks are doing regularly. Don't panic over small changes. Investing is a marathon, not a sprint. Stay informed and be patient. Section 8. Trading tools and tricks. Want to be a pro? Here are some extra tools. Stop loss orders. Automatically sell if the price drops too low. Protects you from big losses. Mobile apps. Trade on the go. Check your portfolio anytime, anywhere. Financial news websites. Stay updated on market news and expert analysis. Remember, knowledge is power. The more you learn, the better investor you'll become. Section 9. You can do this. Start investing today. We covered a lot. Now you know. The stock market basics. How to choose a brokerage account. Researching stocks like Infosys and Reliance. Placing trades and monitoring your investments. Don't be scared. Start small, learn as you go, and invest for the long term. Remember, the stock market is like a garden. With care and attention, your money can grow. Go on, take that first step. Your future self will thank you.